Alright folks, this is our daily log entry for February 2nd, 2021. Alright, so pause the video, that way you can prepare for your own annotations. Alright, so this is a 5-minute chart of the February 2nd, 2021 Euro dollar. And yesterday's trading, we had relative equal highs here, so we have a buy-side liquidity pool there with the lowest down close candle inside of the swing that makes the low between the high and the higher high. So all of the stops that will be resting here that gets taken out, they break those orders. So anyone that's short, trying to sell short on retail resistance here, they get taken out. And smart money sells short. Now these two levels here is a fair value gap that you can find on your 15-minute time frame. If you cannot find it, trust me, it'll be included in the midweek review tomorrow. So this breaker is characteristic of mitigation. Okay, so its ideal scenario is when you have a bearish, as we have had for Euro, bias. If we trade below it, it should act as resistance, but not if we have this. Okay, if we have a sell side imbalance, buy side inefficiency, I will always first use the mitigation block or breaker. In this case, it's a breaker because we have the high with a higher high, but it's mitigation nonetheless. So what I'm doing is I'm measuring the low of this candle here compared to the high of this candle here. Now, why am I doing that? Because it's on a 15-minute time frame and I'm measuring the mitigation low and the fair value gap high on the 15-minute time frame that's inside of this sell side imbalance, buy side inefficiency. So what I'm doing is I'm anchoring the fib here to here and finding 50%. So what this is a measurement of mitigation within a sell side imbalance, buy side inefficiency, and consequent encroachment of the sell side imbalance. Okay, so the opening price at midnight on New York time, we see it trade up again into that fair value gap with consequent encroachment. It breaks lower, pausing in this area here, and then taking a deep dive into our 120.40 level, which I prompted you at the time right in here when we were trading at that moment on my community tab on YouTube. So this level here is that daily fair value gap on Euro, the high end of it, okay, the premium high end. The discount low end of that same fair value gap is this level here. So we dug into that fair value gap, traded one more time in New York, hitting that rejection block here and inside of the mitigation sell side imbalance, buy side inefficiency, consequent encroachment. So it hits it beautifully there, sells off, another fair value gap in here, smaller one in here I just overlooked that, I'm sorry. So we have a small little sell here, continues lower, 1, 2 times, you can sell off again, and here's the end of London close, and right here is where I prompted pay the trader. All right, so we went a little bit lower. That's sometimes what happens, and I mentioned it in very clear terms. My exits are not always as good as my entries. So the time element here is still serving us very well. It just misses this little bit here. If it rolls over into Asia, you know, so be it. But I think we might get it up into this fair value gap here. It might want to touch the top end of that fair value gap premium high again. If it does, that might allow for another opportunity to sell off and clear this low or whatever low forms that doesn't touch the fair value gap discount low. So again, what I gave you for the daily chart on Euro, the lower fair value gap on that chart That's these levels here, this and this. Okay, all I'm doing is allowing it to show graphically how it digs into that higher time frame PD array. All right, let's go over to cable. All right, so here's the 5-minute chart on British pound versus US dollar. If you're not ready, pause your video. Okay. All right, so we have a 15-minute breaker, okay, that's defined by this dashed line and this dashed line. So go to your 15-minute time frame and you'll find that breaker. And also we have a 5-minute breaker here. And we have buy-side liquidity pool here, which we run above in the London open kill zone. So we run up into that, sell off, come back up in, touch the 15-minute breaker again in here, sells off, small little fair value gap in here with bearish order block, sells off, consolidates inside of the 15-minute breaker, which again you'll find this on your 15-minute time frame. All this consolidation is occurring inside that, and then we have displacement. Come back up in institutional order flow entry drill with a fair value gap. Another opportunity here, which is really a optimal trade entry short in New York Open. So you can sell short here. Price has another level of displacement. Trades back up to the bearish order block with a fair value gap and mitigation block. So we have a high, a low, a lower high, down close candle. There's your mitigation block. It hits that, sells off, another little fair value gap in here. Doesn't really do anything with that yet. Then we have a fair value gap here as well with another level of institutional order flow entry drill right here on this candle. And then it sells off into, and look what it does. It creates the low just ahead of the London close. Okay, so you see a little bit of difference between entries and the strength and precision there versus my exit strategy. Okay, so I've been very transparent with you. Sometimes it'll be right in here and I can get very close to the low, but I'm not ringing in everything that would be over here, which is the Asian range and central bank dealers range and pull out. Those will be included later on. Once everybody in this recent group gets to the level in the monthly content that starts talking about that, then I'll ring it in on the daily. But until then, no. So the market has a retracement from this low here, which is also a 60-minute rejection block. So you can find all these PD arrays in your own charts, annotate them, include whatever information you want to make reference to as well. And I'll join you again tomorrow for a midweek review of the IC10 mentorship. Until then, be safe.